With everything happening in the Middle East, I was pretty surprised. Most people expected oil prices to skyrocket. However, that didn't really happen. And that's actually an important story if you are watching mortgage rates. Yes, oil prices are still higher than we have seen in the past few weeks, but they're staying much lower than many experts expected. Why? Because there's still a lot more oil moving around the world than people originally thought. Even with all the uncertainty, millions of barrels of oil are still making it to the market every day. That's helping oil prices from climbing even higher. So, why does any of this matter if you're buying a home? Well, because oil prices, as we talked about, affect inflation. And inflation is one of the biggest drivers of mortgage rates. If oil has surged dramatically, we'd probably be having a very different conversation today. Thankfully, that hasn't happened, at least not yet. Now, I do want to mention something. Although oil prices have stayed relatively stable, mortgage-backed securities over the weekend this morning, that some lenders have already adjusted pricing. That's a reminder that mortgage rates don't move because of just one thing. Economic reports, world events, investor confidence, they all play a role. And that's why the market can change so rapidly. So what does this all mean? My advice really hasn't changed. If you're trying to perfectly time mortgage rates, you're probably going to be very frustrated. Instead, focus on finding the right home and making sure the monthly payment fits your budget comfortably for now. If rates improve later, we can always refinance. But if the right house comes along, I won't let 1 week's headline stop you from moving forward. One thing I always remind buyers and the realtors I work with is this: being a mortgage broker isn't just about finding competitive rates, it's about having options when something unexpected happens. Just last week, we had a buyer already under contract when the first lender came back with underwriting conditions that really didn't make sense for the loan. It could have delayed the entire transaction or even canceled. Because we're a broker, we didn't have to tell the buyer to start over. We just simply pivoted, moved to another lender, and helped them through their situation. Actually, a better situation. We've already had the approval and the transaction is moving forward as we speak. If we only worked with one lender, the buyer likely would have had to start all the way over, submitting documents again, pulling credit, losing valuable time, and having a significant amount of frustration. That's the value of having options. It's not just about shopping a rate, it's about keeping the transaction moving forward when unexpected challenges pop up. Whether you're questioning about today's market or you've run into some difficulty with a loan scenario, let's talk. The headlines will change every single week, but our job stays the same: to help you make informed decisions instead of emotional ones. Have a fantastic week.